Let's take a look at these numbers, because looking at the number comparative to the April period, we have seen a slight rise come through, but it's a fallback that's filtered through if you're comparing it to January, February and the March months.
Correct. We are still struggling to attain the levels that we experienced early this year. From January to March, we were very much in positive territory, on the verge of positive territory. April saw us drop dramatically into negative territory. Even on a seasonally adjusted basis, April was a very poor month in the trade environment. May has brought better tidings. On a seasonally adjusted basis, we're now verging on positive territory, and without the seasonal adjustment, we're just slightly in negative territory. So we hope that from April into the coming months of this year, we see the start of a positive trend. There are some supporting factors that indicate that such a positive trend may be in the offing. We've had very positive data come out of the wholesale environment today. We've had positive data come out of the motor trade environment. So hopefully these are indications that consumer activity is picking up, and the consumer is now ready to partner with business towards greater levels of economic activity.
And yet, when we look at the Trade Expectations Index, we've seen a decline from 63 in April to 61, showing that not many are actually buying into this or being very positive about the outlook ahead.
Yes, we're still very much in positive territory on the Trade Expectations Index. It has been bobbing around in the lower 60s and not quite breaching the 65 level, which would be nice to see. The more concerning factor in terms of trade expectations is not the overall trade environment itself, but the translation of positive performance in the trade environment into jobs. And this time around, there's some alarming news in that regard, in the sense that the Trade Activity Index remains in negative territory. So currently, there's not going to be substantial numbers of jobs created, but worse is our 6-month outlook. The Trade Expectations Index has now dipped into negative territory, and that's after being in positive territory for most of this year and for a large part of 2010, or the latter portion of 2010. So this is the first time we've seen negative territory for the employment component of the Trade Expectations Index. So the trade environment is still optimistic about its prospects, but not so optimistic about translating positive prospects into jobs.
And of course, that has been the key focal point. We saw it emerge in manufacturing data as well, where that was the disappointing feature, that we're not seeing those jobs, much needed jobs, being created. Let's drill down into some of the other components here, because we've had the sales volume index recovering to 56 following April's level of 46, and that, I think, the most significant jump we've seen when drilling down into the various components.
Yes, definitely so. When we released our business confidence index, we'd identified that there was something of a build-up in the manufacturing environment, but we weren't seeing those goods move in any particular direction, either domestically or internationally. We're hoping that the trade environment is now signaling that the manufacturing build-up is now translating into higher levels of activity in the domestic trade environment, and that is why those sales volume numbers have increased. Usually when sales volumes increase, we look at prices and try to determine whether there's an inflationary pressure, and the index is very strong on the fact that inflationary pressures are currently contained. There are some risks on the horizon, but because the levels of economic activity are so low, the trade environment has been fairly successful in terms of containing inflationary pressures right now. But one has to watch those volumes and prices in tandem to determine the degree to which inflation.
And that's exactly where the surprise comes from, because many are anticipating those inflationary pressures and input costs to increase down the line. And yet when you're looking at that expectations index, we've seen selling prices and input prices declining on those fronts as well. Does that come as a surprise to you?
Not really, because the levels of economic activity that support the trade environment aren't building up to levels where inflationary pressures are a serious concern. So quite simply, the inflationary pressures are being absorbed within the system. But as we continue to see progress, the trade environment would have to give vent to some inflationary indications, and the degree to which the trade environment can absorb cost pressures is of course limited to an extent. It's showing already that it can't create jobs, so there's a constraint on that front, and it's still very much a pressured environment. But to date, fairly successful in terms of dealing with inflation. But that's not to say dramatic swings in the oil price, dramatic change in the administered prices will be easily accommodated. To date, we've had accommodation taking place, but the inflation is definitely a risk as we progress towards greater levels of activity.
Well, Neren, let's leave it there. Thanks so much for your time today. Of course, Neren Rau is CEO of SACCI and talking to us about trading conditions for May.